Good afternoon, traders, and welcome back to the Hot Stocks Outlook for December 8th, 2017. Hope you're all doing well out there in the financial markets, and we, as always, have a lot of really great opportunities to cover today. We're going to be looking again at that food space, which we've covered over the last couple of weeks. We're going to take a look at Kroger here, revisit Dean Foods, and also a lot going on in retail. So we'll look at Foot Locker, Bed Bath & Beyond, and Abercrombie & Fitch. And one of the great things about utilizing this approach, again, is recognizing these big sector rotations and really understanding where to go ahead and deploy that capital. So in Kroger Foods here, what we have are our daily bars and candles, obviously representing our price data. And against that, we have this black line and the blue line. Now, the black line is what's called an actual simple moving average. So that's just a summary of what's already occurred in the market. And what we're able to do is compare that with this blue value, which is actually a predicted moving average generated via the artificial intelligence found within the VantagePoint software here. And whenever we get that blue line, that prediction moving above the actual moving average, it tells us the trend is up. And we see that since that forecast came through, this market has gone higher and higher, and we've never gotten a cross. So the cross has never moved to the downside where the predicted moving average is below. We've actually just gotten more and more separation, signaling that this is a very, very strong trend. We see here the market is now up 23.9% since that forecast came through. Now, in addition to those two values that we're able to identify the overall trend direction, we're also given a predicted high and low range in addition to this predicted neural index at the very bottom of your screen. Now, this is an extremely accurate 2-day or 48-hour indicator, and we can use that to really anticipate short-term strength or weakness in the market. So we can see you get a little bit of weakness after that predicted moving average moves lower. You get some sideways action as the predicted neural index goes to the downside again, but the trend is still very much to the upside. And so what this allows traders to do is utilize this predicted high and low range that you're provided with every single trading day and really understand, okay, where do I want to be accepting new positions in the market? At what prices do I want to accept? And you see, if we go ahead and bring up those predicted high and low ranges, you really see how this works out. The trend is up. You want to be buying on these dips down to these predicted levels. So if you have a limit order waiting there, you actually get filled at the open on that day. You want to buy at these levels, and really use these tools to guide you along the course of the trade. So you can buy into that market, set some short-term profit targets at the predicted high levels if you're a shorter-term trader, but really be expecting to, again, ride that longer-term trend in line with the overall forecast. So let's go ahead and look at more opportunities here. Dean Foods is what we've covered really over the last several weeks and really identified, okay, well, we got this crossover all the way back here at the beginning of November, and only more and more strength coming into this market as that predicted moving average moves well above the actual moving average. And over the course of this trade here, we've gotten a really nice move higher, about 18%. But we've seen this over all these food stocks like Dr. Pepper, Snapple, really any of the beverage and Tyson Foods food manufacturing companies, this whole sector doing very, very well. And that's where you can deploy your capital, take some trades, and make money as that sector rotation occurs. Now, with the holidays coming up and all that, obviously retail, usually a nice place to look. But of course, you want to have good timing in the market, understand which trades you should hold on to, which trades you should let go. And this is very, very cool here. In Foot Locker, we'd gotten a crossover here between that predicted moving average and actual moving average. So if you're running the scans, the IntelliScan feature in the software, you're able to identify when all of these fresh crossovers start to occur. But sometimes things get pretty tricky, especially in the early part of a trend reversal. And so you may have wanted to come in and say, okay, well, I want to buy at these predicted lows provided from the VantagePoint predicted high and low ranges that you're provided with, as long as that trend, that predicted moving average remains above the actual moving average. And what's really nice here is you see we run sideways. There's some sideways action in the market, but you never get that cross that says that the trend is now down. You should step away from the position. If anything, it says, okay, well, the market is now, again, showing this separation between the blue and the black line. You get a nice gap up in the market. And this market's now 45% over just the past 17 trading days. But of course, if you're trading this stock, you really want to make sure you have your position on over these time periods where not only is the trend strengthening, but you also see that neural index strongly there up at 1, telling you that it's time to go ahead and load up on your position. Make sure that you are long if you're bullish in this particular market. And just as a side note here, you just see how effective these tools are to help you remain in a position and know what to expect, because that's really what it is all about with trading, is knowing what your expectations are, allocating your risk. But you see here that the neural index comes down to a 0. You get that short-term weakness, but look how much separation between the blue and the black lines. You want to hold on to those trends, make sure you're around for this part of the ride too, and make some more money to the upside. That's a move from about $40 a share up to $46 in 5 days. So you definitely want to make sure you hold on to your position if that's your trading style and your trading trends. Next opportunity here, Bed Bath & Beyond. I believe we took a look at this maybe a week ago or so, but same thing here. We get this crossover between the blue line and the black line telling you, okay, well, use those predicted high and low ranges, determine where you want to accept prices, some entry prices for your orders, and you see how this works. Again, over the course of a trade, you get a little bit of a pullback here. But if you're buying into that market, I mean, that works out perfectly. You buy in one day, the next day the trend continues, and away we go. See another entry right there. You can add to your position as the trade moves forward. So if we come up and bring up the predicted moving averages, you see that the separation here is very, very strong, telling you remain in this position. You want to go ahead and ride that trend. You can trail your stops with the market, but about a 16% move just in this month of November here and going into early December. So really less than a month of a time that you'd be in the market in total there. And last but not least, let's look at Abercrombie and Fitch and really keeping the logic here the same of understanding, okay, well, we're getting crossovers in some of this retail space all along the same period of time. You saw there with Foot Locker, Bed Bath & Beyond, that early part of November through mid-November, saying look to get long some of these companies here. These trends are starting to reverse. And so again, we bring in that logic of bring up those predicted high and low ranges, get the best price possible, and a really great fill actually at the open here on this trading day. You see another fill there, another fill there. And so as you're trading these markets and wanting to add to your position at the appropriate time, wanting to take some profits along the way, you're going to have this guidance to really help you not only take the position, but really hold on to the position. Because, a lot of times in these markets, you get these gaps up in the market, you get, days where you open and immediately move higher, and you really want to make sure that you're in the market for these periods of time. You see a 43% move higher in the market. You see over this period of time an entry, and the market's up 13% just over the next 2 trading days from these entry prices. So you see another entry there, market up another 9.5%. So that's how you can really utilize the tool here, the VantagePoint and the predicted ranges, the predicted moving averages, to really help you be much more efficient as a trader. And that's really what it's all about, really executing your trading style, how you view the markets, but really understanding the trend, short-term strength or weakness, and at what level you should be looking to accept prices. So as always, guys, thank you all for watching. Make sure you leave any questions or comments you have about this approach or the tools that we're using here. But as always, this has been the Hot Stocks Outlook for December 8th. 2017. Can't believe we're already almost through the year and getting ready for 2018. So best of luck to you traders out there in the markets. Thanks for watching, and bye for now.